Session. I think others will join us along the way. So yeah, today we'll be talking about how to overcome fear. I don't know how many times I've said this. But really, have you ever felt that tight knot in your stomach right before you press the buy or sell button? The hesitation, the second guessing, that creeping feeling of uncertainty. Well, that's fear. That is fear. And it's one of the most powerful forces standing between you and your trading success. But here's the thing, you are not alone. Fear is a natural part of trading, but it doesn't have to control you. Today we're going to break down fear, how it shows up in your trading, how it can hold you back, and most importantly, how can you overcome it to become more confident and disciplined as a trader. So let's define fear first. I think that's important. You must know what it is so that you can identify it. So right. So fear in simple terms is just an emotional response to perceived risk or danger. An emotional response to perceived risk or danger. It is not real. It's something that you're making up in your head that this trade might be a loser. You don't know for sure. This trade might be if I don't get involved in this trade now, there's a high chance that I might miss out on the trade. That is not real. So, fear is just an emotional response to perceived risk or danger. So, in the world of trading, that danger often comes in form of potential losses, maybe past losses, volatility. Maybe there's news today. You think there's a high risk in the market, stuff like this, or the uncertainty of the next price move. You're trying to figure out, you're trying to know for sure where price is going to go next. Hi, Shanganisa. I hope you guys can still hear me. We are talking about overcoming fear in your trading. So, I said the first 5 minutes of our daily life trading sessions from now onwards, we are going to have one topic that we're talking about. So, today is overcoming fear. So, we're just defining fear right now as basically a fear or an emotional response to perceived risk. It's not real. So fear doesn't reflect reality. In trading, it often comes from your own biases, misinterpretations, or over exaggeration of risks. So it's something that is always made up in your head. So this fear can distort your judgment, sometimes paralyze you in the face of opportunity. You know, when you're afraid to press the button buy or sell because you feel like you still don't have all the conditions on your side of things. So, and it ultimately prevent us from making the right decisions at the right time. So this is how fear holds you back. First, if we can look at the fear of loss and how it can really cause you to exit trades too early, fear losing. Imagine you just entered a trade with a $40 risk on it. As soon as you see minus $10, you want to exit. And then 2 minutes later, it has gone your direction. Fear can hold you back. It can cause you to exit trades early. So you might take profits too quickly, or worse, let the trade go negative because you are tired of losing or you're terrified of losing. This is a classic example of what is called loss aversion in trading. It's a psychological principle that suggests that we fear losing money more than we enjoy winning money. So fear can cripple you. Second type of fear is the fear of missing out. It can lead you to chase trades impulsively. So you see a big move happening, and instead of sticking to your own strategy, you rush in, potentially buying high or selling low. And we know what happens when you do that. Imagine buying high chances of losing, or you've just minimized, or you just increased risk and minimized potential profit by taking a trade at the wrong location. Let's look at the third type of fear, which is the fear of being wrong, which can lead to paralysis. Maybe you spot a trade or a setup, but you're afraid of making a mistake. So you freeze and the opportunity slips by. How many times has that happened to you? I know it has happened so many times to me. So the result will be you missing out on that opportunity or making poor decisions or even lack of consistency, which is what we're trying to get over. Most of us were just trying to get consistent. Once we are consistent with a good prop firm account, we can make a good amount of money, right? So the fourth type of fear I wanted to talk about is the fear of uncertainty. The markets are unpredictable. You must know that first things first. And the uncertainty can cause a lot of anxiety. When we are uncertain, we tend to overthink every trade and avoid taking real reaction. So we've talked about what fear is. We've talked about the types of fear and how it can hold you back in terms of um, you not making the right decisions at the end of the day, in terms of you missing opportunities, in terms of you lacking consistency. So now let us look at how you can overcome fear, the solution. So first things first, you need to acknowledge it. Do not run away from fear. The first step is simply recognizing that fear is normal. Don't let it shame you or make you feel weak. Every trader feels fear. It is how you respond to it that matters. The key it is to confront it, not to avoid it. Okay, confront your fears. One of my mentors once said to me, the best way to stop the monsters that chase you at night is to turn around and face them. So confront your fear. Identify that you're afraid. Identify what it is that you're afraid of and take action anyway. Second step to overcoming fear is developing a solid trading plan. I've always been an advocate of this because a trading plan takes care of your fears. It tells you when to pull the trigger. It tells you when you should wait. So a clear, well thought out strategy can give you confidence in your decision making. If you know exactly why you are entering or exiting a trade, fear of losses, some of its power over you. So trust the plan, not the emotion. Do not get involved. Hence, you might come into trading because you desire something, and that's an emotion, or you fear the worst happening to you. That's an emotion. I hear that, but what is the plan? So develop a solid plan and trust the plan, not the emotion. In terms of risk management, fear often comes from the uncertainty about how much you can lose. So by setting a stop loss order or defining your risk to reward ratio and never risking more than you are comfortable losing, you can reduce fear. The more you control risk, the less you fear or the less fear holds on to you. Have you ever realized that when you've calculated your risk, you're not worried about the market coming to your stop loss because even if it does that, you know exactly how much you are going to lose. So sometimes to overcome fear, you have to use stuff like mindset mastery and visualization and meditations. But that's just the next level. I think the first three, acknowledging fear, and not running away from it, developing a solid trading plan, but most importantly, risk management. Once you've calculated, you're not afraid of losing because you just know that whatever you lose is just 1%, it's just half a percent, it's just 5% of the account, it's not the whole thing. So you still have enough to fight the market. So let's wrap it up before we can start looking at the charts. Just remember that fear is part of trading, but it does not have to dictate your success. By acknowledging it, following a solid trading plan, and managing your risk, mastering your mindset, you can push through fear and unlock your full potential as a trader. Very important to remember is that trading is not about making the perfect decisions. Or let me put it like this: trading is about making decisions, not being perfect. Okay? Trading is about making decisions, not being perfect. Okay? So acknowledge that the fear is there, but go to your plan. The plan is going to erase that fear and calculate your risk. As always, keep learning, growing, keep trading, and stay confident, stay disciplined, and let us look at the different markets that we can trade today. I hope I hope that was insightful. Let me know in the comment section if um, that section on overcoming fear helped. Okay, let's look at trading view. Trading economics as well, maybe to see what news we have. And maybe the calendar as well. I'm happy that session helped. And if you happen to want to go through it at a later time, you're more than welcome. I will upload it tonight on the YouTube channel. Also, give some likes and some comments on that YouTube episode. You're allowed to say whatever you think, whatever you feel about the content that's going to be posted. So let's look at headlines for today. The Federal Reserve, US Federal Reserve, pauses the rate cut cycle. So the Federal Reserve's kept funds rate steady at 4.25% between 4.25 to 4.5% range as expected. Pausing its rate cutting cycle after 3 consecutive reductions in 2024. So this means the US is showing more optimism about the labor market and noted that inflation remains somewhat elevated. Sounds like a lot of gibberish, hence I read it. But once you get to the chart, things will start making sense. Yeah. So US economy is likely to slow down in the fourth quarter of 2024. Bad news for the US economy. Hope things pick up. European Central Bank expected to deliver the fifth rate cut. Inflation is very high in Spain. German import prices rise more than in the most in 22 months. So yeah, lots of economic news. But let us see, or let us translate that into a chart. I'm trying to open a chart here. See if this reloads. Hope we do not run out of time soon. So overcoming fear, you need to take action, and we might have to rely on MT5. This thing is taking too long to load. And with our charts, we need to remember what we are looking for. Let's just try this again. There we go. Seems like things are going well now. So yeah. I had a chart on silver here. Let's look at the dollar index. Yeah, let's look at the dollar index. Remember what we had expected, 107. Market was able to push through that. I want to do this to remove everything. Please be active in the comments because I have a question. What do you see? When you look at this chart, what do you see, or what's the first thing that comes to mind every time you see a chart? Gonna have 1 minute for this question. When you look at this chart, what do you see? Be honest, there is no wrong answer. What do you see? And we're looking for opportunities here, obviously, but you need to know where and what does an opportunity look like. Very important. Where is an opportunity and what does it look like? So basically what you see here, it is filled orders. Offenser says he sees a level of demand. Good. It is good to think technically, but you must not think in terms of a strategy. So this is just a chart showing buyers and sellers versus sellers. Basically, this is a chart mapping the activity of buyers versus sellers. That's all you need to know. So second thing is you want to get an opportunity or to leverage on any opportunity that might avail itself here. So that means you need to know what an opportunity looks like. That is where fair value versus supply and demand comes in. Yeah. Katlego says structure of the market. Yes, you can say that, but it's just buyers and sellers. So in order for you to make money, it's either you will be a buyer or you will be a seller. So the next thing is how do you know whether to be a buyer and a seller? That is where the process of top-down analysis comes in. Now you know that you need to go from a monthly time frame to find direction and all the way down to time the market. So high time frames, monthly, weekly, and daily time frames are for direction. So we look at the current candlestick. So it is the opening price versus current market price. Based on that, current market price is below the opening price. Yeah, opening price was up here. Current candle. Opening price was here and we're trading below that. That means we're bearish. So going to a weekly time frame, we look at something similar. Yep. We go to the current week now, which is the current candlestick. Look at the opening price because it's bullish, it opened lower, and current market price. Current market price is above the opening price. So that means it's bullish. So the ideal situation with the three higher time frames, which is daily, monthly, and weekly, is we are trying to find a situation where all three time frames are telling us the same thing. It should be bullish or bearish. So once there's a contradiction, follow the direction of the higher time frame. In this case, it is the monthly time frame. Monthly time frame is said we are bearish. Okay. So with this, I was marking the opening price. Today's opening price was here. So this meant we are bearish on a daily. Bearish on a daily, bearish on a monthly, but the weekly is bullish. So This means we need to be looking for selling opportunities where you look at the size of these candlesticks compared to this one, and you can tell somewhere around here, this is where the big buyers are sitting. And this, guys, this is just fair value because the market was consolidating. Our opportunity comes from areas of imbalance, which is this kind of areas. So this is when you now step down to lower time frames to find the area of interest. To me, this is an area of interest. And look at that, there's a gap here. Remember, the market is meant. The fact that we don't trade fair value or a consolidating market doesn't mean that fair value is insignificant. This is what the market was meant for. The market was meant for every buyer to meet a seller, hence consolidation. Or it was meant for transactions to be easily made. In this space, buying and selling was easy. In this space, selling was horrific because the market was pushing up. Only buyers survived here. But in this case, both buyers and sellers survived. This is what the market was meant for. But for you and me to make money, we need to find an area of imbalance. So I'll say 109,400 is an interesting area for me on the dollar index. So the market has to fill in the gaps. Okay. The market is supposed to fill in the gaps. Let us look at Euro USD. I do not trade this pair. Full transparency. Whenever I'm trading this pair, I lose terribly for 12 years straight. I do not know why. My biggest loss that happened in 2017, $5,000 in one day. That was my biggest loss. Happened through Euro USD. The chart is not moving. I might have been showing something wrong. I'm sorry, ladies and gentlemen. Look at that, all that explaining. Sorry about that. I hope you can see. Um, how is it now? Should be perfect now. All right. Is everyone seeing Euro USD on a monthly time frame? Fantastic. Thank you for that. I'm sorry, I wasn't aware. So let's look at this here. First things first, high time frame. We're looking for direction. We look at the monthly time frame. We are bullish based on the current opening price versus current market price. Current market price is above opening price. For that reason, we are bullish. And we look at the current week now, which is this one here. Here's the opening price on this candle. We're trading below that, so we're bearish. On the daily, this is the daily time frame. We're trading above the opening price. For that reason, we're bullish. So we have a situation here. The daily, weekly, and monthly time frame are not in agreement. The monthly time frame is bullish, daily time frame is bullish as well, but the weekly time frame is bearish. So what do you do? Follow the direction of the higher time frame. In this case, what we're being told to look for, it is buying opportunities in this instance. So what do? I look for a candlestick that represents imbalance or that represents buyers that came in strong into the market. So from here, I go to the left and it is clear to me that this is the candle of interest, right? So this is the candle of interest. And it looks like there is fair value around our area of interest because we're expecting the dollar index to be bearish. Okay, dollar index is expected to be bearish. Euro USD is supposed to move the opposite, so we are anticipating bullish moves here, and as confirmed by the higher time frame or the monthly time. Uh, yes, no, monthly time frame direction. To me, it says this is the most viable area to look for buying opportunities from, because where we had pointed initially, we have fair value. So remember, areas that are in fair value have a less probability of working, or zones that are around fair value. So we look for areas that are outside fair value. So this would work. And we also have another area of fair value there. And one would see this as a potential selling opportunity, probably in the short term, but I wouldn't get involved in these areas based on what happened on the left. So we have an area of fair value on the left. As much as selling opportunities are concerned, maybe somewhere around 1.09 on Euro USD. But let me remove this. So Euro USD, we're looking for buying opportunities. One of the reasons we're looking for that is, let's see if we can get to DXY. We're looking for buying opportunities on Euro USD because on the dollar index, which we were looking at just recently, there we go, because we're looking for selling opportunities here. So expect that let it move from fair value to that area there, and then we'll look for opportunities on all the way down. Hence Euro USD. We have oops, a lot of things have been erased. So hence with Euro USD, we're looking at buying if we come down to this area. It's a big gap in between that. So if you can trade reversals, you can look for selling opportunities. Otherwise, this is the most ideal situation. Let's look at Nasdaq just so that we have a bit of balance. Let's look at Nasdaq. Starting on the monthly time frame, of course, Nasdaq is bullish. We go on a weekly. We're bearish. We go on a daily. We're very bullish. So, which direction do we take? We take the direction of the highest time frame. So we're looking for buying opportunities. So step down to lower time frames to see an area or to find an area of imbalance. To me, clearly we have this area right here. I'm not sure if price really mitigated that area, because I would really like to see price come down to 21,400 on the Nasdaq. Then we can find buying opportunities. This also goes very well with the correlations rule on the dollar versus the equities markets. It is inverse, and the correlations of the US dollar to pairs like your USD JPY. So with USD JPY, we should be finding some buying opportunities. So this is some old analysis. I don't rely on something that we did sometimes even last week. It may not be relevant today. So the dollar index is bearish. So let's look at USD JPY. It is bearish on a monthly as well. Bearish on a weekly, bearish on a daily. So this is the most ideal situation. This is what we look for in most instances. So from our findings, we're bearish. That means we need to be looking for selling opportunities. Then you scale down to slightly lower time frames to find those areas. We have something here, but when I look to the left, I'm not happy because it is surrounded by fair value. So zones that are within fair value are of less probability. So continuing with my scanning, I think let us see if we can return to this area of 158, and then we are going to look for selling opportunities. What other pair can we put in here? So we've looked at equities market, we looked at currencies. Let's see if we can find something on gold. So gold is we're supposed to be finding some buying opportunities. This is some old analysis. Once again, let me remove those. Let's see if we can do this under 3 minutes. So we're bullish on a monthly, bullish on a weekly as well, bullish on a daily as well. There we go. So we need to be looking for buying opportunities. Ideally, if you ask me, I'll try to buy here because of the imbalance break of structure on the left-hand side, and we have fair value here. So I'll need price to come down to 2,700 for more buying opportunities. But let's look at if we can find something very close that we can take advantage of. Seems very, very unlikely. We might be on the money with that position that we're looking for right here at 2,700, which is slightly below. So I didn't consider the zone that was here because this is fair value, right? So this is also fair value to me because the market spent a lot of time trading here. And this is not how we make money. Remember, for me and you to make money, there must be a significant price displacement. When price is trending or I mean ranging like this, we don't make a significant amount of money. We rely on leverage. We must remember that. Okay. So this is fair value to me. So let's see if prices come down to 2,700, then we can get more buying opportunities, which to me it's very in line with the dollar index. We'll see if we can catch some reversals on the way down, which even though it's not my favorite thing to do. So today we spoke about fear. Sia says I must explain the idea of fair value. I have 1 minute to do this. The market was meant for this, not this, not that, not this, but this. So the market was meant for every buyer to meet a seller or to make transactions easy. You want to buy 100 bags of potatoes. The best place you can get 100 bags of potatoes is at a marketplace, right? So you come in, they've already priced it. So it's easy exchange, buying and selling. So buyers and sellers are meeting here. So we call this a market. But when the market is imbalanced like that is where me and you have an opportunity, right? So the concept of fair value is the price is fair here because buyers and sellers are in the same place and they agree on the price. But once there's a dominant seller and a dominant buyer, then the market is out